Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Connect, president of Universal Accounting Center, and this is a show dedicated to helping you as you work on your business to offer quality accounting services and get paid what you're worth. Here in this, we actually bring on the experts, individuals that are basically experts as to it relates to their services, their focus, and what it is they're doing to build their businesses, to share their insights, their perspectives, and things that we ought to be considering as we're running our businesses. Traditionally, we'll have on the show individuals addressing marketing, selling, pricing, staff training, tech stacks, so many things that you need to be aware of as you're running your company. And today's going to be an excellent example of that. We've got Shena White. Shena happens to be an award-winning contractor, scaling and profitably specializing as a speaker and wealth efficiency expert. So Shena, welcome to the show.
Thanks for having me.
This is going to be a lot of fun. Now, one of the things that I know that you specialize in is CFO and advisory type services. So we're going to dive into that here in a moment, but I want to give some context to my listeners as to a little bit of your background as it relates to accounting. What got you into the accounting profession?
So it was actually kind of a funny story. So
Okay.
I used to own a contracting business, and that's why I work with contractors now. But about 3 years into my construction company, I found out my accountant had embezzled all of my tax money.
Shame.
Yeah, it was really uncool. It was pretty much the worst day of my life. I actually heard it on the radio. I was like going to a meeting, and on the radio, they were like, oh, if this person is your accountant, it's a real bad day. And I almost ran off the road because that guy was my accountant.
Oh my heavens. I was going to ask how you found out. So it was literally over the radio.
Yeah, it was this local radio host here in Denver called the Troubleshooter, and he had been apprised of this situation with this guy, and like this whole thing happened, and it turned out it was me, my company, 120 other companies in Colorado. It was crazy. It was a $25 million. The guy's in prison now where he deserves to be, but
Yes.
That didn't get my money back. And then at the time, I didn't trust anyone. So because he had been well referred to me, he was considered one of the best. I'm like, if this guy, the best, stole all my money, then, what am I going to do? So I took that time and I learned a lot, and I was able to kind of like figure out everything with the IRS, deal with that situation, get on a payment plan for life, and really turn things around. But also in that process, it made me look at every single piece of my business from a financial perspective. And I was able to take my business from 4% to 24% profit that same year. And then I just started helping others and discovered that I really loved helping other people with their finances and with their accounting and their bookkeeping. And now that's what I do full time.
I love this. One of the things that I really appreciate about your story is I so often work with individuals who have successful accounting type businesses, but never got the formal training or went the traditional path as you might expect with a bachelor's degree and working for the Big Four and all those types of things. So what you're offering here is, I think, a unique perspective for businesses, because clearly accounting is accounting, but you come at it from a different perspective because of the life lessons that you've had. And as it relates to CFO type services, you're going to be able to provide kind of a unique perspective because you come at it not from an accounting point of view, but from a business owner point of view. And I'm sure your clients appreciate that. So let's dive into the CFO related services. Let's first of all define that. What is CFO or fractional CFO services that someone might expect?
Yeah. So, you have your bookkeeper, which I also offer bookkeeping, but that's your bookkeeper does like the data entry, right? Making sure whatever your QuickBooks says or whatever bookkeeping software matches the bank, and all of those things match. That's really more of a data entry kind of position.
Yeah.
And then you have generally your CPA who does your taxes, right? So they are very much looking at, okay, how do we pay less taxes if you're doing, tax planning, but a lot of them don't. But it's very, tax related. But in the middle there's a whole amount of financial input we need and information we need to be able to make good decisions on a day-to-day basis in our business. And that's where a fractional CFO comes in, where it's like, okay, I'm going to do analytics to look at what happened, but I'm also going to do projections and look forward so we can actually build the business we want and have our financial picture look the way we want it to in 6 months, instead of just having our finances kind of do whatever they might do.
I appreciate that explanation. One of the things I would add to that is you're right. With bookkeeping, it is obviously doing the transactions, recording everything as it relates to preparing the financial reports. Accounting is looking at obviously then the trends, those reports, how it's relevant to the business, what's going on with the different relationships of the different things within the P&L and balance sheet, so that we can look at margins and ratios. But the thing that's very important about fractional CFO or CFO services is the business model. It's the cash flow. It's looking at the relationships with capital as to where the funds are coming from, the venture capitalists, the investors, and with that business model, proving that it is in fact a profitable business model. And we're looking at correlations between payables, receivables. We're looking at basically how the business is functioning on a day-to-day basis and whether or not it's doing so profitably. So that's clearly a different role than what perhaps the bookkeeper or accountant would be involved in. So I brought up now fractional CFO. What's the difference between a CFO and a fractional CFO?
Well, like large companies, they have a full-time chief financial officer who's looking at this stuff every day and that person costs, a minimum 200, but if you really want a good one, probably like $350,000. So think about most companies can't afford to have someone of that, expense on their books. So fractional, meaning I work with up to 15 clients one-on-one, and then I have a group program for smaller companies that want to learn on their own and want to get that financial insight, but can't even afford, the fractional amount.
Exactly. Yeah. Fractional part-time CFO. You'll hear these terms thrown around as it relates to smaller businesses that cannot employ someone like you described full-time. And perhaps the business isn't just large enough, but there's not enough work necessarily to justify that position. But clearly every company, even the smallest of companies, would benefit from having a CFO perspective in the business, not just simply to record as a bookkeeper would the transactions, not simply to look at the financials and understand what's happening within the business, but clearly focus on the business model as it relates to the cash flow. That perspective is so valuable, and for someone to be able to afford at a fraction of the cost that expertise, that service is valuable. So how does a fractional CFO actually help manage both the day-to-day financial operations of a company as well as kind of the high level financial strategies that the business may be using to run the company?
Yeah, so it depends on the company, but most of the time I meet with my clients twice a month.
Hmm.
And 1 month is more of a look back meeting. Okay, what happened, right? So we're looking at the financials. I have some different model systems that I use. One specifically called Cash Flow Story that I really love.
Okay.
That then it takes the actual data and it gives us our 7 levers of cash. And so then we can play with those in real time with the actual company's data, and we can kind of create some modeling, some plans. And so we look really, that one's more like backward looking, like what did happen.
Hmm.
And then the next meeting is very forward looking, like, okay, we know this happened, but how do we make a different thing happen in the future? What do we need to do next? What gets us to our goal? So first start with somebody and figure out, like, what is that goal? What is our destination, right? Because if you don't know where you're going, any strategy will work. So we first have to determine where we're going.
Hmm.
And then we have to know where we are and be really honest about that. And I think that can be really difficult because, it's money. And so it's really sensitive. So I think that's where I like what I do too, because I told you my story. I got all my money stolen.
Hmm.
Like I didn't know what the heck I was doing. So there is no judgment here. There is no shade. We can be honest about where we're at, and then we can be honest about where we want to go and create that path. And so that second meeting is really like, where are we on this path and what are we doing and where are we going next?
I really appreciate that. And there's two things I want to address. First of all, the fact that your role is both forward and backwards looking. If you don't understand your history, your past, you're doomed to repeat it. And so we've got to understand what's going on in the business. And when I'm working with my own clients, one of the things that I value about that meeting is they live the day-to-day operations of that business. They know what happened in the last month or quarter. And as I look at the financial reports, I'm trying to say, here's the story that the company is communicating via the language of accounting. Here's what it's saying in the numbers. Is that correlating with what you experienced? And they're going to say either yes or no, but I'm able to dive into the numbers and basically see, are the numbers reflecting what they're experiencing? And that's very important to the business owner because then they become more familiar with the financials over time. But to your point, looking forward, there are KPIs, key performance indicators that we're looking at. We're trying to identify what metrics do we need to be watching And to your point, we're trying to say, okay, forward thinking, what are we going to prioritize and emphasize in the business to accomplish the goals that we're trying to? And it could just be, product sales, it could be profit margins, it could be revenue. What are those things that we're going to prioritize? And what are the metrics that we need to watch to know that we're moving in the right direction? It's the mile markers to realize that, are we on the right road? Are we on the right path? Are we focused on the right things? And there are instances where I've had situations where the KPIs aren't truly the ones that they want to be watching. They initially say, well, here are the numbers I watch. Well, we start watching
Mhm,
those and we're realizing, you know what? We're not looking at the right things because we're getting off track. I think what we need to
mhm.
do is actually focus on these numbers. And lo and behold, now we're getting back on track. And it's much like driving a car. If you take your eyes off of the destination, or so let's say 100 yards down the road, if I'm taking my eyes off of 100 yards down the road, I may very well veer in my lane. I might, crash into the traffic that's coming around the corner. I don't
Yeah.
know, but I've got to look at the right thing. So here's my second thing, though, that I wanted to mention is I like how you brought up being vulnerable. One of the things that I've experienced with my clients is, like you, we all have these raw experiences when running a business where we're not perfect and we're making mistakes, and crap happens to us. And so all of a sudden, what takes place is, at some point, they're going to become vulnerable enough with you because of the safe environment you create, that they're going to reveal something that they thought no one knew, and they're telling you for the first time. Tell me about that relationship where you actually build that trust to the point that they start to confide in you.
Yeah. I mean, for me, it starts from the initial conversation, because at the end of the day, we're talking about money, and I want us to be a team and realize that no matter what, like, I'm on their side. I'm just trying to help. And so my initial conversation with people is really just conversational. Like, I once had somebody who was like, "Is this how all your conversations go? I don't feel like we're talking about business." I'm like, "Dude, I'm just getting to know you, because if you don't know and like me, and I don't know and like you, and we can't work together, then we're never going to be able to figure out your finances." And I've been down that road,
Mhm.
and that sucked. And it was a waste of their money, and it was a waste of my time. So I don't do that anymore.
Well, I appreciate you sharing that, because one of the things that I've experienced is, I have 5 things that I focus on in the business coaching that we offer. And the first is engage and manifest. And the reason why we begin there is because I do want to understand the individual as well as the company. And so often when challenges arise, I'd like to know what makes them tick, what makes them dig deep into their gut and keep going, what causes them to sacrifice like they do when the hard times present themselves. And so
Yeah.
I do want to get to know them on a personal level. And so often they're like, why are we having this conversation? It seems kind of, off topic. And I'm like, well, no, I want to understand you. What makes you tick? Why is this so important to you? Why are you making the sacrifices that you are? And at the end
Mhm.
of the day, there are things in their personal lives that sometimes hold back their business growth because they're distracted. They can't work on the business because they're dealing with personal issues. And I want to know what those distractions are, because when we end the meeting with an objective of, here's what you're going to go and do, and the next time we meet, you tell me you didn't do it, I'm like, well, hold on a second. This was important to you. Why didn't you do it? And that's when they start to reveal, well, I was distracted. I couldn't work. I had to take care of this. Those things are business related. They may be indirect, but they're very valuable. Wouldn't you agree?
Oh, 100%. I think everything is business related. And I end up working with a lot of husband and wife teams. And so that's difficult, because I think an entrepreneur inherently is a balloon, right? And so they want to go everywhere. They just want to go everywhere. I want to do all the things. I want to go everywhere. But every balloon needs a tether. Well, a lot of times in family businesses, one of them is the balloon and the other one is the tether. What do you have there? Tension. So then I like to become the tether, so that that other person doesn't have to be.
Mm.
So I'd rather them have tension with me than their spouse.
Very interesting. You remind me of a conversation I had with one of my clients. This is about 3, 4 years ago. It was in the first conversation that we were just starting. And I can't remember if it was the wife or the husband, but one of the two said, we need you to help us not get divorced. That's how the meeting started. Is, if we keep going down this trajectory, the tension in the business is such that all we're doing is we're just talking about business all the time, the challenges we're facing, we're butting our heads. We don't have a marital relationship any longer. And so if we don't get this thing addressed, we know where this is headed. And I'm like, that's a great way to start this whole discussion is, I'm here to save your marriage. And that has been the case. And
Mhm.
fortunately, today they're still married. So we're doing good there.
Fantastic.
We're doing good. The reality of it though is this business advising does take on a lot of unexpected roles. So I like this part of the conversation. This is really good.
Oh yeah. Well, and I had a family, I had a husband-wife business, and I'm divorced.
You didn't work with me. There you go. You didn't work with me.
Yeah, there was a lot of stuff there, but now I have business opportunities and stuff with my fiance.
Mm-hmm.
And so there is a definite difference between that sort of relationship that doesn't work and that relationship that does.
Yeah.
And so having had both, I feel like I have a unique perspective. I can help people there too. Like, look, this is how you communicate. And it's all about creating, honestly, shared vision, because a lot of times where some of that comes is they might be in the same boat, but they're rowing different directions. And so all they're doing is just spinning in circles, and they feel that spin, and they get frustrated with each other because they're like, no, you row with me. And the other one's like, no, you row with me. And it just, but if we can create that shared vision and then move that direction, then we have a lot more cohesiveness, and they feel like they're on the same team. And there's a lot there that helps. And I've dealt with a lot of like teams.
And this one example, just to kind of correlate with what you're sharing, it was very important for them to identify what roles they were playing in the company.
Yes.
One of them was very much attentive to detail, and so they were much more money focused. They were actually debt concerned, and so they were really following the money, and that was very helpful. Where the other individual, the other spouse, was a little bit more visionary and a little bit more driven and was willing to go into debt. Well, it was basically addressing their strengths, trying to figure out what roles they were going to take on in the company, and then more importantly, respecting one another's roles, because they each had to kind of push back against the other to kind of rein them in, tether them as you would with the balloon. And so once they realized that they each had respective roles to the success of the business, they were able to then leverage those strengths accordingly. So yeah, I totally agree. This is a great part of the conversation simply because it's so relevant.
Yeah.
Our personalities bleed into our businesses. Yeah. Get your free copy of the book In the Black, 9 Principles to Make Your Business Profitable. This is a how-to guide for accounting professionals to work with their clients and actually implement proven processes and systems to ensure that their clients make profit a priority. It is in this book you'll actually learn how to map the business and, in fact, make marketing, accounting, and production a priority within your client's business. You also learn the wisdom pyramid, how to actually take the information you're providing to your clients and effectively use it so that they can make more informed business decisions. This book is designed to help you communicate more effectively with your clients and, in fact, have them see you as their profit and growth expert. Get your free copy now of the ebook today. All right, so let me move on to something a little bit more CFO related, as I'm curious. A lot of times when working at the CFO level and we're not dealing with the bookkeeping and such, even though that is a service that you also provide, one of the things that I find interesting is there are strategies that we can use and things that we can do to navigate some of the complex tax planning issues and compliance issues. I'm just curious, from a CFO perspective, is there anything that stands out in your mind as to these are essential parts of that CFO engagement that you do with your clients to avoid some of the tax and compliance issues?
Well, one of the things I do is I make sure that they have all that in line, and they actually have, like, if they're not going to use me, that they have a great provider for that. So if I go into their books and they're a complete mess, then we have to address that, right? Because I can't analyze a mess, right? Garbage in equals garbage out.
Yeah.
So if I'm seeing a whole bunch of negatives on the balance sheet that are not supposed to be there, stuff in crazy places, all of the above, it shows that I had one set of books I looked at once where it showed their bank account had negative $253,000 in it. I'm like, really? You have negative $253,000 in your bank account? Like, why would you think that? I'm like, because that's what your balance sheet says.
That's what it says. Well, here's some of the things that I address, and I'm curious if you have any thoughts on it. As it relates to compliance, you're right. There come times where they're going to need a loan, for example, and they're going to expect to see the financial reports. Well, if they're a mess like this, it just makes it so difficult at the time of needing the loan to be able to get it, because obviously the numbers are all messed up. And so the financial reports, if they can see value in why it's important to run the business based on the numbers, they're more eager to get not just annual numbers, but quarterly, and then eventually monthly, and then real-time numbers. They start to see the value in using these reports to run the business more deliberately and intentional, more informed. And so they
Yeah.
start to, over time, much more appreciate this information. That's the compliance side. I really find that
Mhm.
eventually they get to the point where they're as interested in the financial reports as I am. And that's kind of a win in my opinion. The second, as it
Right.
relates to taxes, is with regards to taxes, this is the first place I always start. Is many of the businesses I deal with, they're trying to avoid taxes. So they're always trying to push down those profits, and they're trying to say that as a company, they're just barely squeaking by, making no money whatsoever to avoid paying taxes. And I'm just like, okay, that's
So
fine. But
short.
all you're doing is you're just trying to portray yourself as a non-profitable business. Who wants this? It has no
Mhm.
value. It's not worth anything. All this
Yeah.
equity and sweat that you're putting into the business is for naught because it's not worth anything. And so it's just having this real discussion of, it's okay to pay taxes, especially if you've got an exit strategy looming on the other side where you may actually want to show that the business is making money. And so these are some tax related conversations that I think are very valuable to have. And I don't know that there's necessarily a right or a wrong answer. It's just for the business owner, what are they trying to do? What's their exit strategy? What's their exit timeline? What is the retirement plan? I mean, there's a lot of discussions here, and they kind of circle back to this tax question. And the tax does relate then to loans and so forth. If you're going to go and take financial reports in, they're also going to ask for tax returns. So we've got all these things that truly at a bookkeeper level don't really matter. As an accountant, they may be relevant, but it's at that CFO level that they're essential. Wouldn't you agree?
Oh yeah, 100. And actually, what's funny is you said about that the trying to pay less taxes and all that
Yeah.
stuff. And again, it comes down to what's your goal,
Hmm.
right? Because if okay, so hypothetically speaking, say you're 40 years old and you plan on being in this business for another 15 years,
Hmm.
then yeah, pay as little taxes as possible, whatever, don't care. But if you're older, or maybe you're still 40 but you want out, if you want out in the next 3 to 5 years, pay your taxes. It will make you more money. And I know this because I'm actually in the middle of purchasing a business right now. And the gentleman decided he did not like to pay taxes, and so he has money coming from the business, but it's all, he was very good at not paying taxes. But now I get to buy his business at a very small amount compared to what I believe it to actually be worth. So it's actually great for me. So
Yeah.
that's
And
fantastic.
a business broker may say, well, we're going to back in all those personal expenses that ought not have been there, but they were. So we're going to
They
back them all in and
tried.
everything else. But honestly,
Yeah.
at the end of the day, it just doesn't hold the same amount of weight if it
Yeah.
was just a profitable business to begin with.
Yeah, and then you have to think about, financing, right? So if
Hmm.
you want someone to be able to, if you don't want to sell or finance and you want to be able to go get an SBA loan, the SBA has very specific
Hmm.
tolerances for how much they need your business to cash flow, and they don't care about your P&Ls, they care about your tax return,
Yeah.
and they're very limited on what they will and will not add back. And it's not about SDE. They don't care about seller discretionary earnings. They care about what they decide. And so you really have to focus on what is my end game, because because it does matter when you're going to sell. And so I actually do a lot of scaling and selling planning,
Hmm.
like exit planning. I have kind of a program called Scale to Sell, which is all about structuring the business in a way that it's infinitely saleable
Hmm.
and will make you a ton of money. Because everybody dreams of that big check, but there's very specific things you have to do to get that.
Yeah, no, I think that illustrates very well what we're talking about here because on a similar
Mhm.
note, I was recently trying to acquire a business. Their
Mhm.
accounting was horrible. They messed it all up. And when I was trying to get a SBA loan, uh,
You wouldn't do it.
I didn't necessarily need the loan, but I was looking into getting the loan. And as we were doing it, their numbers were just so messed up that they were just saying it's not worth, we're not going to offer anything. And so
Mhm.
that killed the deal simply because the financials are as messed up as they were. And I think too many businesses don't realize the repercussions of what they're doing when they're not focusing on the accounting. It does help them. So yeah, this is really important. All right, so let's talk about financial strategies as it relates to some things that you're doing with your clients to safeguard
Mhm.
their business during downturns. There's talk of a recession and so forth. Obviously, businesses can be affected even, in good times just because of the industry
Mhm.
they're in. How do you deal with businesses that are trying to kind of protect their assets, manage cash flow and those types of things?
So I love reserves, having
Okay.
cash reserves, or having reserves available to you via like lines of credit and things like that. So I always have every single one of my clients go out and get a line of credit when they super don't need it.
Yep.
Because the bank will give it to you when you don't need it. When you need it, the bank doesn't really want to give it to you.
Correct.
But when you don't, they're like, here you go. And then it's a line of credit. So it's basically a credit card. You don't have to use it,
Yep.
but it can sit there as another layer of basically cash reserves that are available to you. So if we need to dip into it, we can. Obviously, we're never going to plan for that, but you don't know what tomorrow's going to bring. So I always like to, kind of like hope for the best, but plan for the worst and hedge both directions. So most all of my clients get to the point where we have lines of credit. We have money in the bank set aside. I like to have 3 to 6 months of cash reserves. Microsoft actually has about 12 months cash reserves at any one point in time. And that is something that Bill Gates has always been about. And he was very strict on that from day one. And he credits that to their success level.
Well, there's a peace of mind that comes when you're running a business and you can pay your bills and make
Right?
payroll. I mean, there's something to be said about that. So
Mhm.
I'm going to compliment what you just shared. As I work with my clients, I do something very, very similar. I do ask them to figure out what it is that they have as operating expenses, payroll,
Mhm.
so that they can identify a dollar amount that they should be having as reserves that's liquid, so that in the next 3, 6, whatever they determine is right, they have available. And what that affords them is when opportunities present themselves, they need to employ somebody, hire another person, upgrade equipment. They've got some capital that they can leverage if they're confident that they don't see a foreseeable need for that in the future. But at the same time, the line of credit is so huge. And one of the things I'll say about the line of credit, and it does vary business to business and risk tolerance.
Yeah.
I know of many clients that have a far greater risk tolerance than I have, but the line of credit, the way I usually try to approach it is your business model should be profitable enough that the line of credit isn't essential for the day-to-day operations of the business. It's great to have there as a reserve, kind of a cushion. If
Mhm.
opportunity presents itself, you have it to maybe go buy and acquire a new piece of equipment. Maybe it's acquire another business. So the line of credit is valuable, but not as a day-to-day operational fund. And so
Yeah.
I do actually try to delineate that for my clients and help them realize, okay, just because somebody's willing to give you money doesn't mean you should be willing to take it and use it. So, yeah, that's
Yeah.
one of the things that we want to emphasize. So, again, it's
100.
risk tolerance. I've got clients that are far more risky than me. Did an interview recently with a banker, and he was all about just leveraging yourself to the hill and just taking advantage of all the monies that you can get access to. But that's a totally different philosophy than when I had been trained on and run the business on. But it's just tolerance. What would you say
Mhm.
to somebody that is more risk tolerant and is willing to go into debt?
I mean, I think again, it comes down to what you want. Like I love using other people's money to grow. Like I would much rather use somebody else's money
Hmm.
because even if it's okay, say it's gonna cost me 25% or 30% right now, but if I can double that money, then I'm getting 100% returns.
Yeah.
Obviously, it's just all about what your goal is and where you want to go. But you have to create the plan and work the plan. So many times, what I see people do is they'll like get a line of credit or they'll get like stopgap financing because say a check didn't come in. I work a lot in construction, so sometimes the check is in the mail for a really long time. And so they'll take that stopgap financing and then the check comes in, but then they don't pay it off. And then they use that money for something else. And then they're like, oh no, now I'm in a deeper hole than I was even a month ago.
Yeah.
So it's really being strict and being constrained in whatever you're deciding to actually like stick with it. And that's one of the things I do with my clients too is when we create the plan, then we work the plan. And I make sure that they actually stick with it and say, okay, this was your goal. This is what we decided. We have to do it now.
Yeah. No. Well, I like that. That's very good. All right. So I've got two more questions for you, and we're going to switch this up. For the individual that's curious about moving in to the CFO advisory space, so they're,
Mhm.
let's say, in the accounting space, or like you, considering this as a great place to service the small business community, what advice would you have for someone as it relates to meeting with and working with clients at this level as a CFO?
I would say, you probably are already doing a little bit or in your mind when you're seeing their stuff and just start having a conversation. Like I did this completely for free for years because I was just helping friends. Like I had figured it out. So I wanted to help all my friends who were in the same space. And so I'm like, oh man, did you try this? Did you try that? And then I found out these things that worked and some stuff that didn't work so well. So we just tried all these things and then I found out I loved it. So, just start trying, just start advising and giving value because, honestly, the more value you can give the space, the more you'll end up getting back.
Well said. Very good. If you're looking to advance your career in accounting, you need to enroll now in the Job Placement Assistance Program. This course is created for accounting professionals to find a new job, apply for a promotion, or get a better position within a company. It is the turnkey process to actually help you better interview, get the job you deserve, and get paid what you're worth. For more information on how you can take advantage of this offer, go to the episode description. Enroll now in the Job Placement Assistance Program. Do it for free and act now. Next question. For my audio listeners, they're not going to know this. Right behind you, the Broncos. Tell me, Denver fan, here we go. What are you going to say?
Oh, yeah, I live in Denver. I'm a season ticket holder. I'm obsessed with the Broncos. I'm obsessed with football. I think that football can tell you so much about business, and business can teach you everything you need to know about football. I analyze my fantasy team like you wouldn't believe. Well, actually, you probably wouldn't believe, but it hasn't been so great this year, though. I've had a lot of injuries.
Uh-oh.
I did win yesterday.
So give me an analogy, a metaphor from the football world to the business world then.
You have to play offense and defense. So many times people focus fully on sales. They are playing offense only. They are sales. Let's get those touchdowns. And they're never playing defense. And so they are spending money quicker than it comes in the door. And they're wondering where it all goes. They're not winning, right? They're like, I don't understand. I put up all these points and yet I'm still losing. It's because they don't have any defense. So you have to play both sides of the ball.
Oh, I love that.
A coach. You need a coach, right? Every single person needs a coach. Even freaking Bill Gates will tell you he has a coach. You have to have one. And that's kind of, I'm a fractional CFO, but it's very coaching in the financial sense. You have to have someone who is not on the field with you, who can see it from outside and know where you need to go and call and help you call the plays because they see both sides. You're seeing one side.
Yep. I use that analogy so often as well because a lot of individuals can relate to the sports metaphor. And so if you're taking, let's say, football, as you mentioned, you've got that quarterback, that business owner that's out on the field playing the games. They're reading the field as best they can from the play. But the coach, they're not able to get into the game. They don't get to step on the field. They can't do anything as it relates to moving that ball, but they have perspective and insights and they can give direction and suggestions. But it's up to that quarterback to not only pull off the play as it perhaps was intended, but also adapt based on real world situations. So the quarterback is essential to the success of the team from an offensive point of view, but it's only because they have a great coach that is on the sidelines giving them information that they can use to run that play. So great analogy here. I love it. All right. So I'm going to actually kind of wrap this up because we've had a wonderful conversation. I'm going to do so by, first of all, pointing out that there's an offer for our listeners that Shena's provided, something that I'd like you to take advantage of, which is her Contractor Cash Club. So in the episode description, you're going to find some information as it relates to what that looks like and how she's actually working with her clients, who happen to be many of which contractors. So definitely go and check out what she's doing from a CFO perspective with her clients to help address the cash flow needs that they have. In addition to that, I want to actually invite you to get a book called Red to Black in 30 Days. This is a how-to guide for accounting professionals to actually address the cash flow needs of their clients. It is perhaps the one thing that so many businesses struggle with that we can immediately make a difference in as accounting professionals if we can just get in and effectively use strategies to turn them from being in the red to being in the black. And this is your how-to guide to do so. So go to the episode description and get your free copy of Red to Black, basically the how-to guide for accounting professionals to take your businesses and put them in the black. Now, that being said, I just want to kind of summarize a few things here that I think are very important. And then I'm going to come back to Shena for a closing thought. The first thing that struck me is obviously her path to becoming a fractional CFO. The fact that as a business owner, she experienced something that so many of us want to never experience, which is that idea of being embezzled and having so much of our funds lost and yet still having to owe the IRS. There is a challenge there that none of us should face. And unfortunately, it came from the accounting profession. And so that individual, rightfully so, is in prison, but she learned from this experience and found valuable things that she could take back to the business community. And initially, she shared later on that she was providing these services for free, just helping friends, helping individuals, just providing some assistance to say, do it better than you're perhaps doing it and avoid what I've experienced. Well, clearly that turned into an opportunity, as clearly any entrepreneur would see, for her to charge and be paid for these types of insights and perspectives. Now she's got her CFO services. She's getting paid well for this advice, and she's working with clients to help them in what they need to actually run successful businesses. So I like that perspective. The other thing that I thought was very important is we were talking about, when working with clients, providing that safe environment. The fact that in addition to the strategies that we might be able to bring to the table as fractional CFOs, there is also that vulnerability that individuals have as they're being personable with their business and with us. They're having to open up and share, here are the things that I'm trying to accomplish, here's my why, but here are some of the things that are distracting me from being able to work on the business. And talking about that with Shena was very important, because I think there is that personable side of business that we sometimes forget, but it's so essential for client relations. The next thing I wanted to point out is that we were talking about businesses as it relates to being compliant, but also with tax strategies, that there are different things that you can do. Do we want to actually avoid paying the taxes and run a non-profitable business, let's say? Or do we want to actually build with the intent of selling it at some point and getting paid very well for the work that we've put in, and at some point actually show that we're making profits with the business, and likewise paying taxes accordingly? So lots of good things there, especially then the use of the financial reports to get the line of credit, having that available, and her suggestions of having the 3 to 6 months of reserves. We covered the gamut. We did a great job here today, just summarizing some of the things that as a fractional CFO, we need to consider when we're speaking with our clients. So, Shena, what would you add to this?
I would just say, for yourself and for your clients, wherever you are is just a place to start. So many times people, we feel like we're not where we should be, or we feel embarrassed about that. It's just a place to start. So for your business, for your clients' businesses, it's just a place to start. And the next step is the one that's the most important.
Very nice. Good. Next steps. I'm all about baby steps. I think that's very important. All right. So I'm going to wrap this up very quickly. For my listeners, if you haven't already subscribed, please subscribe to the podcast. We'd love to have you basically subscribe, follow, and get the notifications as it relates to each and every week when we release a new episode. Get those, and you're definitely going to enjoy them every week when we release the expert advice that we get. Secondly, with regards to past episodes, I want to invite you to go to universalaccounting.com. You can find in the navigation in the podcast section highlights, where we've compiled basically different subjects that you can binge listen to, and playlists that we've put together that relate to marketing, selling, pricing, mental health, tech stack, staff training, just a variety of topics that you can dive deep into based on your current needs and situations. So take advantage of those playlists and see what it is that you can learn from the experts to apply to your business today. In addition, I want to invite you to GrowCon. GrowCon is an annual conference for owners of bookkeeping, accounting, and tax businesses. If you have not yet gotten your ticket, register today and join us each and every May for GrowCon. This is a conference where we actually put on the stage those experts to help us know what we should be doing to work on our business. You get to also not only hear from them, but interact with your peers, other individuals like you who are successfully running bookkeeping, accounting, and tax businesses with whom you can collaborate and learn. And then lastly, you get to meet the staff at Universal Accounting who are committed to your success, so that you can be in business for yourself, but not by yourself. So take advantage of these opportunities and join us for GrowCon. In addition, if you have any interest in these principles and other topics that we've discussed, feel free to reach out to us as well. You can call us at 801-265-3777, or you can visit us online by going to universalaccounting.com. That all being said, have a wonderful day. Enjoy yourselves. Be safe out there. And always remember, if it's about accounting, it is universal. Take care.